Spread, the difference between the bid and the ask. Generally speaking, more liquid, heavy volume stocks usually have smaller bid-ask spreads. Less liquid stocks, light volume, usually have larger spreads. Standard deviation, volatility, a statistical term that provides a good indication of volatility. It measures how widely values, closing prices for instance, are dispersed from the average. The larger the difference between the closing prices and the average price, the higher the standard deviation will be and the higher the volatility. The closer the closing prices are to the average price, the lower the standard deviation and the lower the volatility. Stochastic oscillator, a momentum indicator developed by George Lane that measures the price of a security relative to the high-low range over a set period of time. The indicator oscillates between 0 and 100, with readings below 20 considered oversold, and readings above 80 considered overbought. A 14-period stochastic oscillator reading of 30 would indicate that the current price was 30% above the lowest low of the last 14 days and 70% below the highest high. The stochastic oscillator can be used like any other oscillator by looking for overbought, oversold readings, positive, negative divergences, and centerline crossovers. Stop-loss order, an instruction to the broker to buy or sell stock when it trades beyond a specified price. They serve to either protect your profits or limit your losses. Support, a price level at which there is sufficient demand for a stock to cause a halt in a downward trend and turn the trend up. Support levels indicate the price at which most investors feel that prices will move higher. T-bill, also called treasury bills. These are short-term debt securities issued by the U.S. government. Maturities are usually a year or less, and typically run 13, 26, or 52 weeks. Trading in the secondary market, the price of T-bills rises when interest rates fall and vice versa. Tick, each individual move from one stock trade to another. An uptick means the price moved up on the last trade, while a downtick means it moved down. If there is no change from the last trade, the tick is considered neutral. Trailing stop, a stop-loss level set above or below the current price that adjusts as the price fluctuates. For a long position, a trailing stop would be set below the current price and rise as the price advances. Should the price decline and reach the trailing stop, then a stop-loss would be triggered and the position closed. Trend refers to the direction of prices. Rising peaks and troughs constitute an uptrend. Falling peaks and troughs constitute a downtrend. A trading range is characterized by horizontal peaks and troughs. Trend lines, straight lines drawn on a chart below reaction lows, in an uptrend, or above rally peaks, in a downtrend, that determine the steepness of the current trend. The breaking of a trend line usually signals a trend reversal. Uptrend line, a straight line drawn upward and to the right below the reaction lows. The longer the uptrend line has been in effect, and the more times it has been tested, the more significant it becomes. Violation of the trend line usually signals that the uptrend may be changing direction. Volatility, a measurement of change in price over a given period. It is usually expressed as a percentage and computed as the annualized standard deviation of the percentage change in daily price. Volatility Index, VIX. The Market Volatility Index, VIX, measures the volatility of the market. A recent news story described it as the options market's gauge of investor fear. Traders use VIX as a general inverse indicator of market volatility and sentiment. High numbers mean that there's excess bearishness, while low numbers indicate excess bullishness. Volume, the number of trades in a security over a period of time. On a chart, volume is usually represented as a histogram, vertical bars, below the price chart. The NYSE and NASDAQ measure volume differently. For every buyer, there is a seller. 100 shares bought equals 100 shares sold. The NYSE would count this as one trade and as 100 shares of volume. Volume weighted average price, VWAP, an intraday indicator based on the total dollar value of all trades for the current day, divided by the total trading volume for the current day. Wedge, a reversal chart pattern characterized by two converging trend lines that connect at an apex. The wedge is slanted either downwards or upwards, demonstrating bullish or bearish behavior respectively. Weighted average, a moving average that uses a selected time span but gives greater weight to the more recent price data. Whipsaw, a whipsaw occurs when a buy or sell signal is reversed in a short time. Volatile markets and sensitive indicators can cause whipsaws. Yield curve, a plot of treasury yields across the various maturities at a specific point in time. In a normal yield curve, yields rise as the maturities increase. If the yield on shorter maturities is higher than that of longer maturities, then an inverted yield curve exists. An inverted yield curve is a sign of tight money and is bearish for stocks. Zigzag, an overlay consisting of straight lines that connect significant tops and bottoms on a price graph.